Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Bharat Electronics Limited, hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhirendra Tiwari from Antique Stock Broking. Thank you, and over to you, sir.
Thank you. Good morning, ladies and gentlemen. On behalf of Antique Stock Broking, I welcome you to 4Q FY23 post-result conference call of Bharat Electronics Limited. I am glad to have with us today Shri Bhanu Prakash Srivastava, Chairman and Managing Director, Shri Damodar Bhattad, Director Finance and CFO, and Shri Srinivas, Company Secretary. I welcome the management of Bharat Electronics Limited on the call. Now I invite Shri Bhanu Prakash Srivastava for initial remarks, post which we will open the floor for Q&A. Over to you, sir. Thank you.
Good morning to all of you. I am Bhanu Prakash Srivastava, CMD, Bharat Electronics Limited. BL has done very well by end of this financial year. We have clocked a turnover of rupees 17,333 crores in year 2023, which is 15.21% higher as compared to previous year's figure of 15,044. PBT has increased to rupees 3985 crores as compared to previous years of 3158, giving a growth of 26.18%. PAT is 3007 crores with a growth figure of 28%. EPS has increased to rupees 4.11 as compared to previous year's EPS of 3.21. And total dividend payout in 22-23 is rupees 1.8 per share against rupees 1.5 per share for 21-22. At the end of the financial year, our order book position was 60,690. That amounted to order booking of around 20,690 in year 22-23. So this is a brief about financial performance of Bharat Electronics.
Sir, do you want to open the floor for the Q&A session?
Yes. Go ahead.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur from HDFC Life. Please go ahead.
Hi sir, good morning. Congratulations on the great numbers. My first question was on your, the top line growth for next year. I think you're guiding to about 15 to 17% growth for next year. Just in the backdrop, because your order book growth is about 5% for 23, and I guess even into 24, assuming you get to about 20,000 crores of orders, your order book really does not grow. So I'm just trying to kind of understand, how, what is driving this 15-17% kind of top line? Is it completely from the current order book?
Yes, the 17% order, that top line which we are projecting, it will be from the current whatever order book position is there. Our top line, whatever we project, is based on our commitment to the customer, delivery timelines expected by the customer, because delivery timelines are based on the platform timelines. So keeping in consideration all these things, we are projecting a top line of growth of around 17% in this financial year.
But then, so do you see a risk that, again, because assuming, as I said, orders equal top line in 24 as well, no order book growth in 24, would 25 revenues in turn? Because I'm just trying to understand, unless we see orders incrementally get to about 30,000 plus, growing in double digits may become a problem for us. Is that understanding right?
It will not be a problem, because what order booking we are projecting in this financial year is 20,000 plus crore. which is not factoring many big ticket programs which are in pipeline, like QRSAM, MRSAM projects and these things. Because these are big ticket programs, so they may fructify something this year or next year. So maybe between this year and next year, these are going to be fructified big ticket programs, and so order booking will definitely increase from next financial year.
Sure. And just one last question, sir, on your order inflows, if you could just highlight which are the bigger orders you expect this year. I think you said some ship-based orders is what you're looking at for 2024.
Bigger orders, if you see, one order is for Akash missile system, that ground support equipment BDL got. So Bell share will be around 4,000 crore plus. Long-term fuse requirements, it will be around 4,500 crore. Then shipbuilding programs, NGOPV, NGMV, which the CSL got, NGOP with GSL and this GRSC got, cadet training ship with LNG got. All this taken together will be around 5,000 to 6,000 crore. Bell equipment going inside that. So these are there are so many other programs like weapon this year. Ship, what is that? Varuna Shakti program for electronic warfare for ships. That is around 1,000 crores. So these are some of the bigger programs which are there in the pipeline. And there are many smaller programs which added together to give a big value.
Sure. Understood. Thank you so much, and all the best.
Thank you. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good morning, everyone, and congratulations for a great set of performance and adherence to your guidance in last Concall. So I have a couple of questions. The first one is essentially an offshoot from the last question. That if you look at it, you're guiding for 20,000 crore plus order inflow this year, but there are certain orders that are already in your pocket, like Akash and this naval system and all. So that accounts for practically around 9,000 to 10,000 crores. So and when we speak to the other companies, they say that okay, MRSAM would be there in this year. So aren't we a little bit conservative in the order book guidance this time around? So any thoughts on this?
I'm not very conservative, but when it goes to government processes, especially if it is a big ticket program, so you have to be conservative, because if you see, even if the process has not started, if you see in the case of QRSAM, just a trial has been completed, confirmatory trial has been completed, now it will go for AON, RFP, bidding, then PNC, then order processing. So there was this conservative approach. So either this year end or next year it will come. So what 20,000 I'm telling is about where the process is already on. So when we give the guidance, what we tell, definitely we are going to meet this. And there will be over and above that, if luck favors, we can get something over and above this also. But our guidance is just a bit conservative.
We hope to continue to maintain this 3 times order book on the revenue front. That is, whatever the revenues we are forecasting on the 3 times order book, we are hoping to maintain in the coming years.
Just a follow from this, there's this MRHA program coming up. It's still initial days, but do we envisage anything for Bell in that? I mean, or it would be produced completely out of the kits that are imported?
Yeah, I have not reviewed that project. Anyway, I will come back to later on.
Okay, so the second one is a bookkeeping question. If I look at your receivables, there is a sharp outflow of cash on that front. Even on provisions, there is a sharp outflow of cash. So if you can throw some light on this, didn't we receive the money from the government, or I mean, what is the issue over there, and what would be the sustainable level of receivable, let us say 6 months down the line?
See, 2 things you have asked. One is on the receivable front. The number is 7,000 crores as of 31st March 23, which amounts to 148 days in terms of turnover, which is same as the last year. And as far as the cash position is concerned, the cash balance as of the end of last year, that is March 22, was 7,500 crores. And current year, as on March 23 or 1st April 23, it is 8,000 crores. So there is no constraints from the government as far as budgets are concerned. We are receiving the money. But there are these last 2-3 months sales which account to a major portion, which will be in the receivables in the as on 31st March 23. So otherwise, number of days and cash balance all have been, cash balance has only improved.
Sir, what explains the sharp outflow on the account of provision?
As far as provisions are concerned, in the past 1 or 2 years, there have been some delays in receipt of inputs from the component front. So which has led to this delays in supplies, which has contributed to some of the provisions towards liquidated damages on account of penalties of supplies. This has contributed. That was the major reason. So with this only that the other expenses has increased. Of course, the other one is once the level of operations increase, consequently there will be an increase in the operational expenses like traveling and other expenses. So these two have contributed to the increase in other expenses.
Okay, great. So I have other questions, but I will get back to you. Thanks and all the best.
Thank you. The next question is from the line of Umesh Raut from Phillip Capital. Please go ahead.
Thank you so much for the opportunity. Congratulations, sir, for the good set of numbers. So my first question is on the QRSM program. I just wanted to understand how many stages are remaining in terms of major hurdles now before realizing the contract in terms of signing the contract.
See, confirmatory trial which was required, it has been done. So and it has been successful. Now a small test is remaining, which will be carried out in next month. So that will complete the total evaluation process. After that, services, they have to process the case, that whole process, the defense procurement process. It starts from AON, then the issue of RFP, and then submission of quote, price negotiation, and after that, because it's a big value, it will go up to CCS.
Oh, okay. So my second question is on gross margin. So we have seen gross margin decline from about, say, 48-49% to about 42% in FY22. Now, those are also now coming back to about 44.4% for 23. So is it fair to assume that now we are kind of moving again towards 45-46% of range, because now indigenization benefit also come in, and also the LRSM program is in the kind of 3rd or 4th year of execution. So learning will be better. So margins on the gross level will be relatively better compared to in the last 2 years.
See, last year our material consumption to value of production was about 60%. And current year it is around 57.5%. So we expect the same to remain in the range of this 58 to 60% material consumption in the current year also. We are giving a guidance of EBITDA margin. We have been having 23% in the last year, 22-23. We expect to maintain the EBITDA margin around 21 to 23% in the coming year, 23-24. Because there are different product mix which are there. There are a variety of products. There are 25 units which are operating. So with that product mix, there will be some differences in consumption in various products. So EBITDA margin will remain in the range of 21 to 23%.
Got it, sir. Sir, lastly, on the liquidated provisioning, can you please quantify the number for FY23? And is it fair to assume that now with the normalization in the supply chain or the component availability, the LD provisioning will be relatively lower in next 2-3 years?
As far as provision for liquidated damages for the current year is concerned, it is about 360 crores on account of the delays in supply due to receipt of inputs. But there are some projects, these are large projects which are continuing over the years. So it is not a one-time thing. So as it continues, once it falls into the penalty zone, we need to, it will be there again in the 23-24. But only thing is this, as per the accounting policy, we need to make the provisions. But there are many cases which we take up with the customers once again, and then we have got penalties waived also. So due to which in the current year we have got penalties waived and provisions withdrawn to the extent of about 88 crores compared to what we have done in last year. So we have to make the provisions in accordance with the contract terms, because these are continuing contracts. Some of them will continue in the current year. But at the same time, we take up with the government on various contracts, and we get some of the exemptions also, or penalty waivers also. So hopefully we should get some of them in the current year related to last year. But due to running contracts, we can't tell that all will be normalized in the current year. There could be some fallback of the continuation of last year.
Got it, sir. Thank you so much. I'll join back the queue.
Right.
Thank you. The next question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah, good morning, sir, and congratulations for good performance. My first question is, if you look in terms of the business performance, can you give us some input in terms of how is the performance for the non-defense portfolio? So, A, what was the mix of defense, non-defense for FY23? And how are we seeing both the order flows and the revenue trajectory in the non-defense portfolio scaling up, especially in segments like railway, where we were expecting quite a bit of orders to flow through?
See, there are two things. If you see that 22-23, defense was 87%, non-defense 10.6, export 2.4. We anticipate slight increase in non-defense production this year in 23-24 because of contribution from EVMs and BBPAT. As far as that other diversification area like metro, railway, AI, these are all long-drawn process. So we are working on. It takes time to materialize the order. So if you're talking about DMRC and railway, we have given the proof of concept. We have installed one line. But now whatever that metro is getting installed, they already have the system imported. Now when new line comes, our current line, when they go for upgrade, then only these things will materialize in the big orders. Similarly, other solutions also are working. Same thing is true with the airport authority. Now airport are operating. We have indigenized the system, ATMS and all, but when it will be installed, either new airport are coming or current airport when it is upgraded. So these are all capability building, development of products, diversification, but it will take time for this to materialize. But once it materializes, it will contribute in good numbers.
Sure. Secondly, in terms of factory expansion and new capacities coming in, can you give some update in terms of what is the kind of capex targeted for fiscal 24 and which all new facilities and factories are expected to commission in 24?
Last quite few years, we have been working on building the capacity. Around 500 crore plus every year we are spending. And this year, likely expenditure will be around 700 to 800 crore in capex. As far as new company is concerned, latest is that advanced electro-optics factory at Nemaluru in Andhra, which is likely to be commissioned by end of this calendar year. Work is at advanced stage. Then we are working on Ibrahim Patnam for EW factory. Again, investment of around 300 crores. Palasamudram for defense system integration complex, for explosive and fish complex at Nagpur. So these are all working. They will fructify in next 2 to 3 years. That is the timeline. But yes, every year capex investment is there. Apart from what investment we are making for new factories, even existing factories, we are spending money to upgrade the facility and build additional capacity. Like for a super component facility, we are establishing in our Hyderabad unit, existing facility with an investment of around 100 crore plus, which will add in that another manufacturing line for very, very high precision electronic subsystems like TR modules and all. Then Ercam manufacturing facility and test facility at EWA. So many things we are doing in existing factories also, existing setup also, apart from building a new factory. So this year, approximately 700 to 800 crore may be the capex.
Sure. So third question is, when we look at the core business, that's one part of it, but within the defense space, the UAV space has come, as in is the next, probably the segment within the defense strategies globally. So how is Bharat Electronics scope in this segment defined? Are we spending anything in terms of R&D to build any capabilities on the UAV side? Any thoughts that you have that you can share here?
Yes, we are in UAV business, but you are in a high-end UAV business. We are partnering with the DRDO also, and some other partners also are there, like for unmanned that surface vessels and sea-based. We are partnering with a few shipyards. So we are in the business, but we are not in a very low end that drones and all. We are in the slightly high end, and we are also working on anti-drone systems. So that is also one of the area where we are working.
Sure. I have a couple of more questions. I'll come back in the queue. Thank you and all the best, sir.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. So my first question is on the missile integration program. So how does Ministry of Defense decide whether BEL will be the lead integrator for a particular program or BDL? Is it based on who can add more value in a particular program? So for example, in QRSAM, since we will be the lead integrator, Bharat Dynamics will be supplying us some sub-assemblies, parts, components, etc.?
See, BL and BDL both are part of MOD, and just based on the capability and the capacity available, MOD decides who will be the lead integrator. Like in Akash missile system, if you see, for Army, BDL is the lead integrator. For Air Force supply, we are the lead integrator. Both BL and BDL, we work together because missile is from them and other support systems and electronic equipment control systems, radars and all are from our side. So we work very closely, both BDL and BL. And all these programs, whether BL is lead integrator or BDL is lead integrator. For QRSAM, BL is the lead integrator. But irrespective of who is the lead integrator, everybody has got their work share arrangement and we work together to fulfill the requirement of the service.
Understood. So my second question is on the content that we supply in the naval platform. So what is the typical content we have in large platforms like destroyers, submarines, and now the aircraft carrier? So would it be the 10 to 15% of the overall value of the vessel, or it would be much higher than that?
Normally, typical destroyer or frigate, if you see, around 30% is the value is our content. Around 13 to 14 equipments, naming a few like sonar system, fire control, both torpedo fire control and rocket fire control system. Then communication system, both internal and external communication system. Then you have a ship data network, combat management system, the radar system, and that gunfire control system. So whole lot, around 13 to 14 equipments are there in typical warship, which comes in our kitty, apart from that SAM system, surface to air missile. So minus SAM, it is around 30%.
Understood. Are there any new products that we are developing or we would have developed in recent years which can take this content to even much higher levels going forward?
These are the typical equipments in our product range in the ships. So only upgrade, next generation are all are there. So we are covering more or less all. We are working with DRDO and our own development to make this upgraded with new technology, more effective, these equipments. But these are the typical equipments which are there on any ship platform or submarine platform.
Understood, sir. Thank you very much and all the best.
Thanks.
Thank you. The next question is from the line of Simranjit Singh Bhatia from Master Trust. Please go ahead.
Thank you for giving me the opportunity. I have two questions. First of all, I want to understand.
I'm sorry to interrupt. Sir, your audio is too low. Can you please increase the volume?
No, it's fine.
Yes, sir. Please continue.
There are two questions which I want to ask. Firstly, what will be the revenue mix of the defense and the non-defense going forward in the upcoming time? And secondly, what are the margins we are having in the non-defense segment? Are we having the higher margins as compared to the defense, or it will enjoy the same margins which the defense category is having? These are the two questions.
First, I will answer. Around 85-15 is the typical we are expecting this year. But it has been hovering around from 80-20 to 90-10, depending upon and which year we get more civilian products and which year we get slightly lesser. And in my opinion, it will continue because the way we are growing, even civilian if we grow, but defense also is growing in the similar speed. Request DF to have a
see on the margin front, even in non-defense, it is not one item. There are a host of items which we are supplying, including EVM, VPAS, and other smart cities even because there are many products which we are supplying. So there are different margins in different products. We cannot tell one number how it is. But majority of our supplies are in defense. We have only, last year we have earned an EBITDA margin of 23. We guide for the same margin of 21 to 23. On the segment wise of defense or non-defense, you would not like to say except that it's a mix and there are different margins in different products.
Okay. Done. Thank you.
Thank you. The next question is from the line of Lavina Quadros from Jefferies. Please go ahead.
Hello, sir. Congrats on a great set of numbers. I just wanted to check one thing. Your electric vehicle, the ion battery tie-up and the tie-up on hydrogen fuel cells that you had done, any progress on that or any updates over there?
This electric vehicle front, yes, as per agreement, we have supplied the one set of battery to Triton for their evaluations. So they are evaluating. Once they evaluate, then there also trucks have to be evaluated, and then they will give the requirements with all things to be firmed up. So we are on. But what I envisage is that it will take time for them also to build up that momentum and this and related to this we also. So we have not factored any major revenue inflow from that side in this financial year.
Okay. And so there was also one more to manufacture and supply, devices for the US market with Hyperion. Any updates over there? That was also a sizable one.
I think that also not significant progress is there on that.
Okay. So these will probably become more material 26 onwards, right? Just to understand, if at all.
Which one?
These two, these tie-ups will probably become more meaningful only after FY26, right? Just to understand.
We cannot say. Let us wait for some more time before we give any firm projections.
Okay, sir. Thank you.
Thank you.
Thank you. The next one is from the line of Aman Wiz from AlphaStreet Investment Management. Please go ahead.
Good morning, sir. My question is on the fuse side. So if you can talk about the order which we are expecting, 4,500 crores. It is for how many fuses and over how many years?
It is a long-term fuse requirement for Indian Army. So it is 10-year requirement. So this is for a few types of fuse. But apart from that, other requirements will keep on coming. So this is the one order which will be addressed for next 10 years. So every year you can say around 450 to 500 crores. Apart from that, other fuse requirements also will be there, which will be pursuing.
Sure, sir. On this part, sir, if you can talk about, I think we are currently already doing 150 crores of fuses. So we need to triple our capacity, or as of now our capacity is utilization is very low. If you can talk about that.
We are increasing the capacity in our Pune unit also and for explosive handling. After 2 years, this Nagpur facility also will come. So this will take care of not only this order, but other requirements of fuses also.
Okay. And when do you expect this to come in H1, H2, this order? This fuse order, when do you expect this to come in?
PNC is almost over. Except one odd points where there is it has to be resolved. So we hope that this will be resolved in a month or so. H1 yes. Yeah, it should be. I think this half yearly it should come. That's what.
Okay. And sir, what is the indigenization portion in this product?
It is a graded indigenization. We have to make significant indigenization within 2 years of signing of the contracts.
Okay. So initially it will be very low indigenization?
Initially it will be around 20 to 30% indigenous content, but we have to bring it to significant level. That is there in the contract itself, contract condition, that within 2 years significant portion of indigenization has to be done.
Sure, sir. And sir, there were some private players also bidding for the same, and you had talked about that they had some issues with the trial. So any updates? Will the private players also come in, or will it be exclusive to us and ECIL?
There were many players, but only 2 got qualified technically, BEL and ECIL, and we were winners.
Okay, so only we'll get the orders of this 4,500?
We are lowest bidder, and then already procurement.
No, as far as this 4,500 crore is concerned, already it is decided. We are already commercially low L1 bidder, and that is order 4,500 we are expecting in first half.
Yeah, but the total order was 10,000 crore, if I'm not wrong, right? So the remaining.
No, see, this is the one long-term specific requirement of Army, but future requirement will remain other, so they will continue with other bids also.
Sure. So my second question is on the TCAS side. You have talked about a little bit that metro. You have explained it takes time because we have to wait for the next set of orders. But on the railway side, sir, there is an even bigger opportunity. So metro is just a small portion, but Indian Railways opportunity, we keep hearing about this Vande Bharat trains and all those things. So have we started trial for the same? When do we expect some orders from that?
We are pursuing with railway. We have given a presentation to railway board also, both BEL and we have an MOU with the Delhi Metro. So we will be pursuing jointly with Delhi Metro any other opportunity in the field where we are working. So even with railway, both DMRC and BEL are jointly pursuing. This is on.
Sorry, how long the trials will go for this?
This is just initial presentation, and then it again introducing any indigenous product in an entity which is very, what you say, that safety critical, like railway or civil aviation, where safety is paramount importance. It takes time. See, it all starts with initial concept, then you give a proof of concept, then you give that prototype gets evaluated, then there are multiple certifications are there. After that, you get qualified to even enter that field. Then commercial.
So is it safe to assume for next 2-3 years we don't?
Mr. Wiz, I would request you to kindly rejoin the queue.
Sure.
Thank you, sir.
Yeah.
The next question is from the line of Aditya from Kotak Securities. Please go ahead.
Yeah, hi, and thanks for the opportunity. The first question that I had was more on the order inflows, and thanks for sharing most of your order inflows for last year. It appears as if a dominant share of those order inflows rely on DRDO design or DRDO TOT. I wanted to get a sense whether this is representative of the order backlog of the company, or is this a specific year wherein the reliance on DRDO design is too high?
See, if you see the typical our total, around 70%, you can say 70-75% is indigenous design and 20-25% TOT from foreign OEMs. Out of 70-75%, typically 45-50% is partnership with DRDO and remaining our own design.
Understood. It seems as if this year the reliance on DRDO is slightly higher, but that's not the norm. Okay, thanks for that. The related question was that for whatever proportion one is relying on DRDO design, are there any initial signs of private sector starting to kind of intrude in our territory because these DRDO designs are now also in some ways available to them?
See, the private sector has always been a partner in DRDO for various systems, subsystems. They are part of supply chain management. But when it comes for large-scale system integration, normally we are there. But private sector also is pitching in for system integration with DRDO also. So we have to compete with them, and we have to be able and cost-effective partner for even that.
Sure. Just one more question from my side. I understand that the guidance for next year on revenue is much higher than the growth that the past 2-3 quarters have seen on a YOY basis. Wanted to just understand what would be the reason behind there not being as much growth in the last 9 months on a YOY basis versus the guidance, and some sense of the execution period of your backlog, if you could give me a sense.
See, typically, if you see that quarter to quarter, it is unfair in products like a company like BL to just decide, because ours are mostly large system projects which runs through various quarters. So it so happened that in some quarter your turnover or your revenue may be less, some quarter it may shoot up. Because it's not like in the same quarter we start manufacturing, in same quarter revenue is recognized. So it's better to, if you talk about a year and a yearly basis. So if yearly basis, if you see, we grown around 15%. We are projecting around in the range of 17%. And what we project is also depends upon how much we can deliver based on the requirement of the customer. It's not like 60,000 crore we have ordered, and if we can build capacity, we can deliver this year itself, because customer doesn't want it. He wants to the item when he needs it. So like if shipbuilding projects are there, ship will be built in the next 4 or 5 years, every year 1 or 2 ships. So our delivery has to be aligned. So that's how we see that what are the executable order this year and how much we can do. Based on that, we project.
The average execution period, that will be the last thing from my side of the backlog.
Average around 3 years, you can say. Current order book, it is normally we can take 3 years execution time, because there are 12 months, there are 2 years, there are 3 years, there are 4 years, different projects are there. So normally this current order book can be taken for 3 years revenue.
Thanks a lot. Those are my questions. Thank you.
Thank you. The next question is from the line of Prabir from Ratnabali. Please go ahead.
Thank you, sir, for the opportunity. So I have 2 questions. First of all, I wanted to know the status of the Uttam AESA development. In the last call also, I asked this question and you said that development is going on. Uttam AESA? Uttam. And actually, the Mark 1A order already given to HAL. So I wanted to understand what is the status of the development and how much are you expecting from this and by when?
Uttam radar, yes. I'm sorry that I have not, this time also I have not updated. I just missed it. So maybe you can give me a call or SMS and I will give you a status. I'll just find out.
Okay. And about Akash NG, what is the status, sir?
Akash NG already order is there with BDL, and then we have finalized that, and we have to close the deal with BDL. So it is almost last stage.
So by when you are expecting this order?
Another month or 2 months maximum. First half we should get it.
Okay, and as you said that QRSM is expected next year, QRSM is a high ticket order. So is it like the order will come at once or it will come in phases? What is your expectation?
The defense services has to decide how much budget they have and what phases they have to procure. So how can we comment that in what amount and what value they will procure? We have cleared the system. System is through. It has met all the expectation. It depends upon their strategic needs and their budget availability that they will decide about the procurement.
Okay. My last question is it possible to share gross margin for VVPAD and EVMs?
We would not like to comment on specific individual projects and margins from such there. We can only tell, because we would not like to comment on the segment wise, product wise. We would not like to comment on that.
Yeah, okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Dipen Vakil from InCred Equities. Please go ahead.
Thank you so much for the opportunity and congratulations on great execution. So you mentioned your guidance for next year is 17% on top line. So I just wanted to understand which will be the large orders that you'll be executing this year, and if possible, also the quantum for the same.
See, ours is a very large variety of product lines. So if you see that in the largest order, it will be maybe LR10 will be one for frontline ships. That is one which clearly comes out. That will be range of around 3,000 crores. All others are in just around 500, 600 crores, but multiple lines are there. So we have 24 business units and each doing multiple products.
Thank you, sir. So, a quantum for LSL for this year, you mentioned 3,500 crores?
Roughly around 3,000 crores from LRS and it will come. Execution. All remaining are many products, many lines.
Okay. And so, how much was the export side of revenue for FY23?
It was $48 million, $48.5 million, something like that.
Okay, that's really helpful, sir.
4 crores it was.
Sorry, can you repeat that, sir?
$48 million and in terms of rupees, 394 crores.
Thank you so much, sir. That was all my questions.
Thank you. The next question is from the line of Abhijit Mitra from Ionis Alpha. Please go ahead.
Yeah, thanks for taking my question. So, just wanted to understand the potential order inflow in radars that you see over the next 4-5 years, as in the total addressable market. And as you mentioned, there are a lot of tier 1, tier 2 suppliers coming up and moving into integration orders. So how would the sort of dynamics or relationship of BEL will change with them? Because we have been sort of outsourcing component subsystems to them. So will you try to look for different suppliers now that they're sort of coming up and bidding for the system integration projects?
No. Why? See, if they are bidding with system integrator, for system integrator, we will compete with them. If they are subsystem supplier, we will collaborate with them and get. So it's all a collaborative approach. Where they compete, we'll compete. Where they are part of supply chain, we'll collaborate and we get. Our objective is to give value for money to our customers. So no issue.
Okay, and the potential order inflow in radars that you see over the next 4-5 years?
See, if we radar, we already got one of the biggest order in MPR in 22-23, around 2,500 crores. Then there is a upgrade programs which is there for all. Because of the introduction of 5G, there will be a need for upgrading existing radar in S-band to minimize that interference between 5G frequency and this radar frequency. That is one business opportunity. And there are other radar programs also which are in pipeline. So let us see exact number. Because that services have not progressed, it will be difficult for me to tell you exact numbers. But yes, they are in the process. We are working on that.
Got it.
One of the biggest was a high power radar, of course, which was evaluated in that L&T and ELTA, that's what collaborator or partners, they were shortlisted. So that is one where we are not there as of now.
Got it. That's all from my side. Thanks.
Yeah.
Thank you. The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead. Mr. Thareja, I have unmuted your line. Kindly proceed with your question.
Good afternoon. Am I audible?
Yes.
Sir, the first question is around potential available scope of work in helicopters. I think HAL has a very sizable pipeline of utility and combat helicopters. Likewise, there is a very sizable program for towed artillery guns as well. So is there scope of work in the electronic systems for these, for BEL, and can you elaborate the size, if any?
See, we are working with HAL for especially that missile warning and countermeasures and avionics portion. So yes, there is some work share which are likely to be coming to us from HAL side. As far as towed artillery gun is concerned, I think it is being done by private sector, isn't it? Bharat Forge or somebody. So I'm not very much aware about this.
And for the helicopters, what could be the portion of the missile approach warning systems and other display systems?
At this point of time, I am not able to tell you. But once it progresses and some definite number comes, we'll share.
Okay. And you have, created some provisions for damages, and this has pertained to, supply chain issues, chip shortages, and so on. Have these issues been resolved completely now? I mean, is the
more or less to a large extent it is resolved, but in some cases still challenges are there. So anyway, challenges will be there. We are addressing that.
And the 4 negative lists that the government bought out, there are now systems, components, or even finished assemblies which are supposedly ordained for being done locally at stipulated cut-off timelines. How does that increase? Does that, in the first place, increase your potential opportunity size? I presume it would. And if you could elaborate on what do you foresee additionally coming from?
There are 2 types of positive indigenization lists issued by government. 4 indigenization list, positive indigenization list is for services, where equipments are listed which cannot be imported by services beyond a specific time frame. So that will definitely help. There are many products in that where they are importing, and now beyond that they cannot import. So we are working on those, how we can upgrade, indigenize, and whatever we do, so that we get larger share of the business. So definitely it is very helpful to all Indian industry, because henceforth if there is no opportunity for importing, so they have to source it from Indian sources, whether BL or any other Indian source. So this is a business opportunity. Second thing is that for a positive indigenization list for DPSU, where government has asked us to specify what are the items we are importing and by what time we will stop import and we develop or indigenize and get it from local sources. So that will help Indian industry. We are working on that, because this list is based on the commitment given by DPSU. So we have given the commitment to government that these are the things which we are importing now. We will be indigenizing by this time, and henceforth we will be sourcing from local vendors. So that will definitely help Indian industry, local industry.
Would that mean that your localized or indigenous content of what you supply will keep on increasing? And if so, will that...
Our endeavor is always to increase that indigenous content.
Would that portend better gross margins for you going ahead in that case?
To some extent, yes. But then more indigenization, then customer also will put pressure on your pricing also. So it's not like all that margin built is passed it on in our financial performance. More indigenous content, then we have to pass it on the benefit to our end customer also.
Right. And so final question, there are very large programs for tactical communication systems and battlefield management systems where I think you were in consortium with some private entity. I don't know what's the status of those programs. I just wanted to understand where do they stand?
Yeah, this TCS program started way back in 1994. It was called TCS 2000, but still going on. So a lot of iterations have happened. We have made the test bed also. I think there were 2 consortiums. One was led by BL and another was by major private sector, I think L&T, Tata, and HCL. So it is going on. Discussions are going on. Government is in the process. So once it is finalized, we'll see.
Okay. Thanks. I'll get back on it. Thanks for taking my question.
Thank you. The next question is from the line of Deepak Narnolia from Birla Sun Life Insurance. Please go ahead.
Yeah. Hello. Sir, am I audible?
Yes. Please go ahead.
Yeah, I have 2 questions, sir. One is regarding your cash flow. So there is significant dip in your operating cash flow in this year. It has reduced to somewhere, I think, 1,000 crore rupees from somewhere around 4,000 crore rupees last year. So what is the specific reason for that? And is there any, working capital built up in the year? Or number 1. And number 2 is you have given guidance of 17% revenue growth in this year. Your order book is up only 5%, and in that also significant orders we have received in the month of March this year. Those were tail ends. And last year also your order book was up only 3%. So what is giving you confidence of this, higher revenue guidance, and is the project completion cycle is lower in the mix of the order, or is there any specific reason for that? You will receive any short-term kind of order or something like that? So these are two questions from my side.
See, as far as the cash flows are concerned, so let me say that last year our cash balance was around 700,000 crores, and the current year we have ended the year with 8,000 crores. So overall, there has been a positive cash flow during the year. And the receivables and inventory front also, more or less, the number of days has been same. The volume has, the value has increased, but in the terms of number of days of product value of turnover and production, it has remained almost the same level. So we don't expect any cash flow issues as of now, and there are no budgetary constraints from the government also. So
sir, I am talking about operating cash flow, sir. Operating cash flow has gone down.
Operating cash flow specific thing, I can just maybe get back to you in some more time, okay?
Okay, and about this second question, sir, in revenue growth.
See, revenue growth, we are projecting a very healthy revenue growth of around 17% this year. As far as order inflow is concerned, as of now, we are projecting 20,000 crore plus, which are there in the pipeline. And in the course of the year, if something more comes, we'll revise that estimate.
Okay. Okay.
Yes.
Mr. Nanulia, any further questions from you?
No, that's okay.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good morning. My first question is in relation to, when is the...
Sorry, Mr. Kishore, there is an echo on your line. Can you please use your handset to ask a question at this time?
Sure. Is this better?
Yes, sir. Please proceed.
Okay. My first question is, when is the provision with respect to pay revision likely? Which financial year?
27 is the next revision due, 27 January. The last revision was in 2017. It is for 10 years.
Yes.
So the next revision will only be in 2027 January. As of now, in the next 3-4 years, there are no such pay revisions which are there except for normal increments and DNS allowance increase.
Okay. And secondly, what was your expenditure on R&D in FY23? And on R&D in general, would the growth in investments in R&D continue, to be a certain percentage of revenue or profits, or would that intensity moderate?
See, normally we have been spending around 7% of our turnover on R&D. R&D is a very high priority area for Bharat Electronics. This year we spent around 1,088 crore, which is around 6.25%, so slightly lesser. But we target to increase it significantly to reach it in the range of 7% in this financial year.
Okay. And, as the company is getting bigger, absolute R&D investment is a fairly big number. So, in terms of, the key outcome of spending, say, 11 billion rupees on R&D this financial year, so could you give us some qualitative color, what...
I will just brief you how is our R&D structure. We have a 3-tier R&D structure in BEL. One is that highest level is Central Research Laboratory. One we have in Bangalore and one we have in Ghaziabad. Where close to 700 scientists are working. They work on futuristic technology. They work on technology which are going to develop, are going to come in next 2, 3, 5, 10 years. There are focus areas for them and key futuristic technology. Then we have a product development and innovation center, again manned by around 450 to 500 engineers and scientists who work in various module systems and subsystems which are utilized across the company for different products which we offer to customers. Then every strategic business unit which has got its own development in engineering or R&D, whatever say, who are responsible for developing and making and proving, trial, evaluation and offering the end product and solution to the customer. So if you see that total all three setups, we have close to 2,700 engineers and scientists are working in Bharat Electronics in R&D front.
So, I mean, just to understand the productivity of R&D spending that Bharat Electronics has been doing, what percentage of the revenue that Bharat Electronics, had in FY23 was, driven by in-house R&D? I know I don't know whether it's possible to answer.
In earlier response to earlier question, we said that around 40-45% our products are normally from DRDO technology, around 30% from our own technology, around 20-25% from TOT. Now, if you see in all three segments, it's not like a product comes and we sell. There is always a very high amount of value engineering which is required, or value addition which is required by local R&D to make it suitable for the end customer. So even if it is a TOT, lot of technology transfer, technology absorption, and TOT also work share arrangements are there. Today, you cannot take 100% TOT and supply it. If you take a TOT like LRSAM, in some of area even 40, 45, 50% is our indigenous technology where our R&D has worked. Similarly, DRDO, it is a co-development. It's a DRDO technology, but our scientists and engineers are working with DRDO on this technology to realize the sellable products. So all these contributions, they go from our R&D only. And that is the reason why we are the preferred partners of DRDO on many technology development programs because of our strength in R&D. So that way you see that all 100% revenue, what we earn, there is a contribution from BEL R&D in every front, whether it is a TOT, whether it is 100% of in-house development, or it is a co-development with DRDO.
Sure. And for the benefit of DRDO R&D that we get, we do not as such pay any specific royalty or any payments, or nothing is expected also in future.
No. PSU, and that earlier, sometime there was a royalty provision, but now it is withdrawn. There is. If end customer is defense services or government of India, no royalty payment is required.
Yeah. My last question is in relation to BEL's competitiveness when it comes to export or participating in the export market. So we have been hearing about potential of Akash export, to other friendly countries. Is there any progress, or over the next 5 years, with all the R&D that we do and the competitiveness that we have, what kind of export opportunities the company should target or is targeting?
See, we are targeting very aggressively for exports. Like what we said, that $48 million 2022-23. This year we are targeting around $90 to $100 million. We are participating in various programs, various discussions with customer, going as a part of government delegation also to make sure that we get significant export order. But if you see per se, the export of defense contracts or defense products, it's very, very typical ecosystem for a defense, which is not like any other product. There are many factors that play a role in getting a defense contract, including availability of line of credit to foreign services, what is the geopolitical situation, what is the contribution at G2G level, which country has got what influence. So cost competitiveness is the one factor for deciding from where that these countries they will be sourcing the defense equipment. It is not the only factor for defense export. So we are working on that. Our aim is in line with Government of India to increase the export, but it is not 1 + 1 = 2.
Sure. Those are my questions. I wish you all the best.
Right.
Thank you. Ladies and gentlemen, this would be the last question for today, which is from the line of Umesh Rao from PhillipCapital. Please go ahead.
Yeah, thank you so much once again. My question is related to LoRa weapon system, where we have done MOU with Israeli aerospace industries. I just wanted to understand potential opportunity out of this MOU, for the LoRa weapon system? And secondly, we also did offset contract agreement with the THAL's defense system, where I believe the contract is not yet signed. So what is the potential over here?
See, LoRa, we have signed an MOU. Discussion is on. II has listed also our facility, and we are continuing with discussion. So if there is any opportunity, we are partner with II, and jointly we will address. So that is on LoRa. As far as Thales, we are a partner to them in supplying that TR modules to their export businesses. We have a separate dedicated production line in BL to meet the requirement. So it's not like one contract. Contracts keep on coming. We have an existing contract also where we are supplying, and the new requirement also we are working on that.
So, sir, LoRa weapon system, the demand will be irrespective of indigenous technology, or is it replacing some?
Any import what due to services requirement, there is a requirement of indigenous content in that. So LoRa also, when customer gives the requirement, he will specify how much indigenous content he is expecting. So we'll work with II together that how to meet that requirement of indigenous content and offer the item to services.
Okay, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to Mr. Amit Shah for closing comments. Over to you.
Yeah, I would like to thank the management for giving us the opportunity to host the call, and would also like to thank all the participants for joining us on the call. I would request the management to make any closing remarks, post which we can conclude the call.
Thank you to all participants, including host. It has been a good time for us giving replies. Yes, on few, one or two, we are not very sure on the reply. Person can contact us separately. Like Uttam Radar, I think we are not updated. Others, we tried our best to give you whatever realistic situation is there. I can only assure you that we will make all efforts to take BL to next higher level. Whole management team is working on that and meeting the customer requirement. Whatever projections we are given that are, we are very confident that we will be meeting those guidance. Thank you.
Thank you very much, sir. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you. Thank you.